Good day, fellow investors. Berkshire stock valuation for 2025 will discuss the earnings, the hidden earnings, the current cash, and therefore future earnings potential, Buffett's potential impact as he is 93, and why Berkshire, because of the compounding, is always a buy, and it is just about you seeing whether it fits your portfolio. A great comment here on Berkshire valuation. I have done many Berkshire videos in the past, but as we discussed a few days ago, Berkshire is now mostly a cash position, therefore a hedge, but there is still a lot to value there. My name is Sven Karlin. I do value investing on YouTube, and on March 20 I told you to buy Berkshire because it is a great bargain at that price. Now earnings are almost double, so let's see at the current price and also at the record market cap of 1 trillion, what kind of buy is Berkshire? Let's start with the earnings and then we'll trickle down to the hidden earnings and make a stock valuation. For earnings, we go to the last quarter report, and with every quarter report you must also read this part from Warren Buffett where he says that the accounting reported and what the media reflected in Berkshire earnings is completely wrong. The right numbers are Warren Buffett's shown Berkshire operating earnings, and those and only those numbers tell you what is the real net income from Berkshire. All other financial providers will give you the wrong numbers. And if we look at operating earnings for the first 9 months, with Buffett operating earnings are after taxes. The only company that does that, it is $33 billion. Compare that to last year's $27 billion for 21, growing for $30 billion, 22, $37 billion for 23, and I think will surpass $40 billion for 24. And if you look at the distribution, this is from 2023, insurance, investment income that includes the income from the cash, the treasuries, and the dividends from the stock portfolio. Then there is the railroad, very profitable, utilities, energy, profitable, and then all the other businesses that Berkshire owns in full, like See's Candy and others. Insurance had a small hit this quarter, but that's maybe because Warren Buffett is taking a risk-off approach when it comes to insurance, but still, for the first 9 months, things look better than previous year. Investment income up significantly on more cash, more income from treasuries, Berkshire stable, energy doing better than the 2023 issues with energy, other controlled businesses stable, and all in all, I would summarize the 2024 year with a 40 billion operating earnings for valuation. And as you know, Berkshire is extremely diversified, insurance recession-proof, energy also a little bit recession-proof, railroad would get hit from recession, but there are also many diversified businesses there that make Berkshire really a diversified powerhouse. With 40 billion in earnings, that's not all. We also need to discuss Berkshire's hidden earnings to see what is there that's not shown in any accounting statement. And Warren Buffett often discusses it. If you look at the stock portfolio, Warren Buffett now owns 2% of Apple. It was close to 6%. He has sold. And if you look at the 2% stake, Apple makes 100 billion in net income. 15 billion of that is dividend. 2% of that 15 billion goes into the investment income account we have mentioned earlier. 85 billion of earnings, it's not mentioned anywhere with Berkshire. 2% of that is 1.7 billion. If Berkshire would own 100% of Apple, would go to Berkshire's bottom line. Another example, American Express, they pay a small dividend which is then reported into Berkshire's net income, but 8 billion of the 9.7 billion American Express net income is not reported, and if we look at Berkshire's stake, 21% of the 8 billion not reported, that's 1.7 billion. So we have Apple's hidden earnings for Berkshire 1.7, American Express 1.7. I did it for the other main holdings in the stock portfolio. I came to 4.7, but then if I look at many other companies that are owned there not paying dividends, let's estimate now 5 billion in hidden earnings from Berkshire. It was usually 9-10 billion when there was still the high Apple position, but now he sold and that money is making 5%, 4-5% in treasuries. Hidden earnings add 5 billion and we are already at 45 billion in earnings, which is the value added, the creation that Berkshire makes. Let's go forward and we have to also discuss the earnings potential from the cash. We have discussed how Berkshire is now a hedge because Warren Buffett's going into cash. He's maybe predicting a crash like he did in 2005, but that 300 billion pile in cash is invested in treasuries and making 4.5% a year. And he's always investing in 1 to 3 month treasuries. Now, the interest income there is 13 billion will be for the full year. The thing is that if there is a market crash, then Warren Buffett would invest the 300 billion. And he likes to invest at a 10% earnings yield, like a future growing earnings yield. But that's his return on capital usually required. And that would add 30 billion of earnings, and those earnings would be growing over time. So when I take out the 13 billion of income and replace it with a good return from a business of 30 billion, then we have a potential future return of about 60 billion from Berkshire. That would significantly increase the way people are looking at Berkshire. We have current 40 billion, we have hidden 5 billion, and we have the latent potential from a big Buffett acquisition that could push Berkshire's earnings to 60 billion. 60 billion compared to the 1 trillion is already something, and if there is a crash, Berkshire would likely crash much less than the market. But this is not everything. Perhaps the key with Berkshire is the compounding power, and I have looked at the earnings growth over the last 20 years. When Berkshire was already a company of size and everything, earnings have compounded at 9% per year. They went from 7 billion to 40 billion. That's stellar compounding power. That all increases the equity there. And we have to ask ourselves, what will Berkshire look like in 10 years? So if there is 45 billion of earnings on average going forward to the next years, growing at the percentage that they are growing over time, that should add 600 billion to the equity. The current equity is 600, so we will have equity of 1.2 trillion, expecting an 8% capital return on the equity like Buffett targets. That's 100 billion in net income, not even the 60 that I mentioned, by 100 billion in 10 years. PA ratio of 20, that's 2 trillion, and that means that you would double your money in 10 years, most certainly, because that's what Berkshire is a certain compounding machine. And that is a 7.2% return, which I think is much better than the S&P 500 or other. Of course, the risk is always valuation. If they make 100 billion in net income, which I think they will, and the valuation is 12, then you make 20% on the current money because the valuation is already 1 trillion. Unlikely, possible, but we will see. Therefore, when we put this on the value investing quadrant, I put here Berkshire as a very low risk investment over time from a business perspective. If you look at from a long-term perspective and if you add the cash on top. The return should likely be around 7%, so I should push it a little bit here, but that's a very long-term return when the compounding effect emerges again. For now, perhaps of the valuation, perhaps a little bit smaller return, 5-6%, but the key is the low risk, as it is a powerhouse with cash. Always the question, Warren Buffett is now 94. I think he will be going forever, but some of you think he will not. And the question is, what if not? Well, Berkshire is such a diversified business. Insurance. You will keep using your energy. The trains will keep running. The manufacturing will keep manufacturing. Ajit Jain will keep doing insurance and playing the same game for a few years, and the compounding power will likely continue. So Berkshire is always a buy. You have to see how Berkshire now fits your portfolio. There is the cash, there is the compounding machine. Compare it to other opportunities that you have in your portfolio, and as I say always, Berkshire is always a buy. Thanks for watching, check my research platform, and I'll see you in the next video.